Morning, y'all. Hope y'all doing well. Just a quick update today. I had some family coming over, so I just had a real quick, had to visit with them, and then going to do this quick update and give you a little insight into why I don't trade real risky stuff. I know a lot of people think SOXL is risky. I kind of disagree, especially the way I do it. I did that video of how I trade SOXL. I'll point you to it. But there's a lot of people that chase premium, and I almost fell into that trap. I used to do that back in the days. I've been, trading options 5-6 years, and I've really evolved into a very conservative, in my opinion, put seller. I don't take a whole bunch of risk. I don't like to chase premium. That's kind of why I stay out of forums. I don't watch financial YouTube channels and things like that. But it comes across my path every once in a while to where people say, oh, this got a ton of premium. And, sometimes I fall into it and I look at it and I go, yeah, that's pretty good. But I end up being uncomfortable, and I don't like being uncomfortable in options, right? Case in point is on December 2nd, we'll get into my trades. I sold a put on MSTX. That's the 2X Defiance MicroStrategy ETF. I don't even know what MicroStrategy does. It does something with Bitcoin. I don't know. Okay. But I looked at the premium and I was like, man, that's good premium. Because look at what I did. I went out to January 17th. At the time, it was MSTX was going for $95, and I was able to sell a 25 strike and get $125 for it. Now, if you think about it, it's at $100. It's got to drop 75% to get there, right? And you're getting $125. That's dang good, okay? But the problem is whenever you see some of these high flying stocks, right, that have ran up, there's a reason that you're getting $125 to sell this 25 put strike, right? There's a reason there's premium there, is because it can get there, right? And here's the problem with selling such a low strike at 100. Like, if this thing were to even go halfway down, right, you're going to be sitting on a whole bunch of unrealized losses, right? The lower that price strike grows, even if it goes, say the stock goes to 40, you're at 25, you're still going to be looking at and staring at an unrealized loss. And I don't like to see that, right? You're going to be $1,000 unrealized loss if it goes down to 40, or I'm making up numbers, but it's around there, right? So, or more. So I didn't like it. It made me uncomfortable. So what I did, I closed it for 85 cents, profited $38 in 4 days. And I'm probably never going to look at this stock again, right? Because if you look at the chart, can it get there? Yes. It was, $13 just a few months ago. Now, of course, Bitcoin's gone crazy, and that's what's supporting it. But, it definitely has potential to get there. Another place that people like to look for premium is in biotech. Okay. And I was looking at this one. Someone sold Cassava Sciences back here, which was August or might have been October, when it fell down to like $23. I saw a post and someone said, I just sold 10 contracts at a 22 strike because it's already dropped so much. And I don't know if you notice it, but way down here, apparently they missed a trial, and now this thing's selling for $3 a share. So they're sitting on $22,000 worth of put contracts in the money at a cost basis that it'll probably never recover from. So you got huge losses. And I remember looking at when I saw that post, I was like, man, they have $5 puts that they were getting like $100 for. So even at $5, you'd still be, holding a bag. So be careful out there. Find what you're comfortable with and stick with it. So that's what I'm going to do. I kind of fell into the trap of this one and it made me uncomfortable. So I got out of it. Okay. So that's the lesson of the week. What else have I done? I did a SOXL, went out to January 17th again, sold the 23 strike, got $101. And then Foot Locker missed earnings on December 4th and it fell to $20. And I noticed it recovered a little bit that day. It recovered to 2080. And I looked at the premiums out to January 17th, did the 20 strike where the support level is, got $103 for it. So I'm good with that one. So that's all the trades I did. Currently, what is that? $2,100 of premium cooking for the rest of December, and then $1,100 out in January. I still have to build up January, and we'll be okay. So $1,710, or no, $38 so far realized in December, and that's it. So I'm conservative. Like you'll see, if there's not premium to be made where I'm comfortable, I won't sell any premium. I mean, you can look at that for the first 9 months of the 8 months of the year. I really didn't do much, $300, $400, $500 of premium every month. And I'm fine with that. You have to have that. And for me, I have to have that little cushion or that comfort of selling puts. And I guess it just comes with years of dealing with the option market and knowing what you're comfortable with. And, there's going to be some people that are comfortable with the MSTX and selling a whole bunch of puts. I'm not. So that's where I'm at. So that's it for now. Leave me a comment down below, and hope you have a good week. Use my Amazon link down below. It gives me a couple of bucks when you use it. It doesn't cost you anything extra. It just throws me a bone or two. So I'd appreciate that. Y'all have a good one, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.